Hello traders. Today is the 3rd of January 2013 and the time in London is 70 minutes past 11 p.m. In New York is 17 minutes past 6 p.m. Happy New Year to you all. This video is about how to recognize the Elliott wave patterns. Alright, there are various methods that traders use to recognize different types of Elliott wave patterns. Alright, so the first thing that we want to use if you want to recognize or identify, okay, an Elliott wave pattern is to understand, okay, the Elliott wave cycle. Okay, as I explained to you last time, in a video that we titled What is a Cycle, we know that an Elliott wave cycle is formed of a motive waves and a corrective wave. So we are talking about the trending phase, okay, and also the corrective phase. Okay, so there are two phases for the Elliott wave cycle. From here up to this level here, this is the trending phase, which we call also the motive wave. The motive wave is the 1, 2, 3, 4, 5 waves that formed, okay? The trend motive wave is the first wave, second wave, third wave, fourth wave, fifth wave that will form, okay, the trending phase of the Elliott wave cycle. And then we have the ABC correction, which is the corrective phase of the Elliott wave cycle. So the Elliott wave cycle, which is composed of two components, the motive phase and the corrective phase. Okay, all right. So we can use the Elliott wave cycle to recognize, okay, wave patterns. All right, because we know how the Elliott wave cycle is formed, we will be able to know, are we in a trending phase? Are we in the trending phase of the cycle? So this will allow us to identify, okay, the Elliott wave pattern that can be formed during the motive phase. And if we are in the corrective phase, we can also know which type of pattern we can expect during the corrective phase. So this is one method trader can use to recognize or to identify, okay, an Elliott wave, patterns. Another thing that trader can use is to use different time frames. So we are now on the yearly chart for this stock, Epic Eco S-Ray Papa Delta, Expeditor International of Washington. You see this is here, American stock. So we are on the yearly chart. Looking at this yearly chart, all I can say is that there was a trend. We can't deny that. You see that for many years, since 1995, there was a trend up to 2007. Okay, so he said there was a trend here, and then we see the price went down and went up. Okay, it's a kind of correction here. There was a trend, a correction is taking place. We also know that a cycle on a lower degree can be a minor cycle on a higher degree. All right, so this is very important when we are using, if we want to recognize the Elliott wave patterns. That's why it's so important as we are looking on this on a yearly chart. Nothing should stop us to change time frame. If you can even look on a 5-year chart, if it's possible, we will do that because we know that the market is fractal and the higher time frame command the lower time frame. So the second method that traders use to recognize the Elliott wave pattern is to use a different time frame. So on this yearly chart, all I can see there was a trend, and then I see a movement like 1, 2, 3 so far. Okay, that's all I can say about this time frame. I'm going to tell you first, and then I will explain to you how you do that when you are using different time frame. All right, so the first thing is to understand the Elliott wave cycle. The second method that they can use to identify the Elliott wave pattern is the different time frames. Okay, one can also use different stocks, like this stock now, Expeditor International, is listed on the Nasdaq 100. So very often stock that belongs to the same sector will exhibit similar patterns. So Sometimes if there is a confusion, you may compare one stock belonging to the same sector to another stock, okay, or you look at various stocks in the same sector on the same time frame to see whether, okay, you can identify another Elliott wave pattern, or if there is a consistent, okay, same pattern repeating itself on a different, okay, stock listed in the same sector. So apart from the Elliott wave cycle, we can use the different time frame and also use a different stock that are listed on the same sector, okay, to see whether they can help us, okay, to identify the pattern if it is a bit confusing or challenging to us, okay. The fourth element that trader can use that can assist them to recognize or to identify the wave patterns is the market itself. The market itself is the S&P 500. So we know that using the trading triangle is the market first, okay, then the sector before the individual financial instrument. So sometimes you can, if you have difficulty to detect, okay, the wave pattern, sometimes the market itself, if you see, for instance, a running flat correction on the S&P 500, there is a high chance that many stocks will repeat or exhibit the same pattern, okay. Very often the market, the pattern that we see on the market can be duplicated by other stock, okay, because the market is influencing every other, okay, financial instrument. All right, so 4 elements we can use if you want to identify clearly Elliott wave pattern. We use, okay, we try to understand, okay, the Elliott wave cycle, the motive phase, which is the trending phase, and the corrective phase. That's what is forming, okay. My apology for the pop-up, apology to traders. That is what is forming, okay, the Elliott wave cycle. And then we will also, apart from that, we can use different time frames, which I'm going to show you now how you do that, different time frames that will also help us to identify the Elliott wave pattern. We can also use a different stock, look at different stock in the same sector, and also, of course, the market. There are other ways that traders can recognize the Elliott wave pattern, but we will start with 4 elements today, and I will show you now how we can use different time frame to recognize the Elliott wave pattern. So we're on a yearly chart. That's how we can see. We are wondering which pattern we have here. All right. The experienced trader will be thinking straight away about the flat correction. Is he a running flat correction? Is he expanded, okay, flat correction? Is he just a classic flat correction? In my previous video, I've been talking to traders about what we call the expanded flat correction, which is ABC 1, 2, 3, 4, 5, okay, and the running pattern, okay, the running flat correction. We will look at this and see whether we have a running flat correction or an expanded, okay, flat correction or a classic flat correction. We want to understand what is a correction and the different patterns, okay, that belong to the group of Elliott wave corrective patterns, okay. Now, from the yearly chart, because that's what we can see, we can change now the time frame. We go, for instance, to the monthly chart, okay. This is like a zooming to the price to see the sub waves, because on the yearly chart we are zooming out, okay, so we are looking from far away, looking at just the bigger picture. That's what we see. By going to a lower time frame, we are zooming into the chart, okay, like looking with a microscope to see the sub waves within, okay, the bigger patterns, okay. So you can see the line that I draw here. I will remove my line now. You can see that on the monthly chart, things are becoming very clear for us now. There was, of course, a trend in this session, okay, up to this level here. All I'm doing, if I want to recognize the pattern, I just go right there and say, okay, the price went down. That's what I'm doing. The price went down, okay, exactly the same thing you'll do. And then the price went up here, okay. Just keep drawing. Don't try to force it or do anything else. Just say it went up, it went down. Here we can see it went down, okay. Here, 1 second please. Here we see that it went up. Okay, it went up to this level here. All right, 1 second please. And here we can see that it went down, and right now the price, okay, is changing direction. All right, okay, it's changing direction here on this monthly chart. Okay, all right. So what I'm going to do, I'm going to zoom into it. You can see that the price went down. Okay, now it's changing direction here. Now, for those who understand the flat correction, you can check on Google, look on Google, look for flat corrective waves, or look for Elliott wave patterns, and you see a list, excellent website, okay, where you can go and learn about, okay, and also go to www.24elliottwave.com. But what we are doing at 24 Elliott wave is to simplify it, okay, the Elliott wave, okay, theory. All right, so you may not see all the complicated patterns. Okay, right here we can see that the price went down, okay, and then went up and then went down. We can see that this is A, B, C. All right, but if you look carefully here, the movement from here to this level here, if we zoom into it, look carefully, okay, if we zoom into it, we can see that the price went up to this level here. All right, and then went down to this level. Okay, this is about zooming into the price and went up to this level. Okay, you see now, so in fact the price displayed A, B, C, and then A, B, C. Here in this session we see that it went down, but now we want to zoom into it, which means we want to look at the subwaves. We can see that the price went down first here. All right, and then went up to this level here. All right, and then went down to this level, and then you can see that's all we are doing. We're just counting them step by step. The purpose of detecting the wave is not to make a trading decision, but to just wait for, okay, a clear-cut signal. If you recognize, for instance, a pattern, we do not just place a trade. Like I explained to trader regarding the USD yen, we counted 5 waves. We draw a warning line there. If you recognize the pattern, the same thing we will do. We do not trade like old-fashioned traders. We just draw a line there and wait for a clear-cut signal. If the signal has failed, we will come out. All right? Because if you are counting wave, the worst thing that you want to do is to be overconfident or be very excited and just place a trade like a child. You don't want to do that. You want to also pay attention to the fundamental. As I always say to traders, one must always combine the technical and the fundamental. One example I told traders last time was Marvel. There was a beautiful setup, bullish setup, but there was some decision that went against Marvel, and the stock went down big time. Okay, so always after you see a technical setup, try to go to Google Finance, Yahoo Finance, to combine both technical and fundamental to make excellent decision. Always check Google Finance, read the news, pay attention to the news, because the news is affecting the market. Do not be fooled if anyone says to you that you do not need to know. I'm not saying that you should trade the news, but you need to acknowledge the news, know exactly what is taking place, check the balance sheet of stock if you want to be a swing trader or position trader, to know exactly what is taking place. You don't want to buy a company because you see a bullish pattern, but the company is going to be bankrupted, okay, or go into administration. All right, so these are just few steps. When you are maturing as a trader, you want to start applying those simple rules so you can make excellent decisions day by day. All right. Okay, so now we see that the price went up 1, 2, 3, ABC, and then went up again, ABC. Now, when I see that there was a motive wave, which means there was a trending phase for Elliott wave, and then I see ABC and another ABC. That's what we call a double retracement. The first thing that comes into my mind when I see that is a flat correction. Now, there are 3 types of flat correction. There is classic flat correction. There is also what they call running flat correction. There is also what we call expanded flat correction. In the previous video that I've posted at Just For You channel, we were talking most of the time about what we call, okay, an expanded flat correction. Here, the example that we have here, this is what we call, okay, a running, okay, a flat correction. In normal condition, ladies and gentlemen, in normal condition, which does not happen very often. This is from here to here. This is what we call the A, this one B, and this is C. The A can be divided into 3 waves. A, B, C for the flat correction. The B, which is from here to here, can be divided also into A, B, C. So A from here to here, that's the A, can be divided into A, B, C. From here to here, that's the B, can be divided into A, B, C. And from here to here, that's the C, and will be divided into 5 waves when we are talking about a flat correction. The flat correction is A, B, C, 1, 2, 3, 4, 5. All right? This is the flat correction. As I explained to you, there are various types of flat correction, but the key point you want to understand is to know that there is a ABC, which we call a double retracement. Price went down, went back to where it belongs again. This is a correction that is corrected itself. It's what we call a double retracement, followed by 1, 2, 3, 4, 5. Now, for the expanded flat correction, which I always talk about, we will see that the 5 wave forming the C will come back down completely here, somewhere here. But for this one, which we call the running flat correction, the 1, 2, 3, 4, 5 wave will not go below the low. Repeat, the 1, 2, 3, 4, 5 wave, 1, 2, 3, 4, 5 waves. This is a corrective wave, so it's normal that they are overlapping in this case, because this is not a motive wave. This is just 1, 2, 3, 4, 5. It's a corrective wave. The low of that 1, 2, 3, 4, 5 wave for the running flat correction, the low of these 5 waves should not go below the low of the A corrective wave. From here to here, this is the A corrective wave. From here to here, this is the B corrective wave. From here to here is the C corrective wave. The low of the C, in the case of the running flat correction, should not go below the low of the A corrective wave. You may check on Google or Yahoo Finance to read more articles about this flat correction. But the key point to understand in this video is the flat correction is form of ABC, followed by 1, 2, 3, 4, 5. In this case, we can see that the low of the 5 wave did not go below the low of the A corrective wave. All we will do at this point in time, as a smart traders, we do not jump into conclusion and place a trade. We will just draw a line there. All right? We just draw a line there. And we use our trading tool to wait for a clear-cut signal to buy here. Here, I will buy by all means and look for, and as the price going up, you do not ignore it. Pay attention to the first and near resistance level to manage your trade like a professional trader. The key point that I want to stress on in this video is that to recognize an Elliott wave pattern, traders will first understand clearly the definition of an Elliott wave cycle, and also know that a cycle, a minor cycle, a cycle on one time frame can be a minor cycle on a bigger time frame, or a minor cycle can be part of a bigger cycle. So on this time frame, this is a cycle, but this cycle on this monthly chart can be a minor cycle of a bigger cycle. All right, you understand? So when we want to recognize an Elliott wave pattern, we must use different time frame. As I've shown you in this video, we have started from the yearly chart. As I show you, we see first, a trending phase using the definition of a cycle. We know that Elliott wave cycle is formed of a trending phase and a corrective wave. The trending phase is also called a motive wave. All right? Okay? We can also use different stocks that are listed in the same sector. If the pattern is confusing, we may see similar pattern repeating itself on various stocks, and you may be able to analyze the stock that you are looking at in a better light. The next thing that we can use, apart from using different stock in the same sector as I demonstrated to you in this video, we can also use the S&P 500 by looking at the select. For instance, we were on the monthly chart. Suppose I'm a bit confused and I face a challenge. I don't know what to know about this pattern. I mean, for instance, go on the monthly chart of the S&P 500, talking about the trailing triangle. If I see, for instance, a running flat correction on the monthly chart for S&P 500, I may go back to my stock and look carefully and see, is that a hidden, running a flat corrective wedge. All right. I hope this video has been useful to you, that you will put into use, to recognize clearly Elliott wave patterns. Until the next time, enjoy yourself and be very happy. We are the TSTWSYS 008 traders. Speak to you soon.